Hello, ladies and gentlemen. I'm thrilled to be back with all of you today for another exciting edition of the Extreme Speed Live. First and foremost, I want to extend my sincere apologies for my absence in our last two episodes due to some unexpected technical issues. But let's not dwell on the past because I'm genuinely excited to be here with you today and ready to dive into some interesting trading setup that I'm very glad to share with you today as we get prepared for the New York session. Before we get started, can you all please confirm in the comment section that you can hear me loud and clear and that you can see my screen as well? Well, it's essential to ensure everyone is on the same page before we embark on this journey of trading opportunities. All right, so let's see some comments. Let's see hi in the comment section. Let's confirm that we're really good to go this morning. So I'd like to see some comment, please. I'd like to see some feedback. So what's going on in the comment section? Let's make sure we are all set, and then we'll jump right into today's valuable content that I am eager and willing to share with you all today. So let's see what we have here. all right. So I'm trying to load up my comment box. Oh, great. Okay, I can see a handful of comments in the comment section. All right, 610909, Adele 123 918. In fact, thank you very much. Jorita, I see you. 309, I see you too. Hello, Carrie, I see you too. Thank you for holding in for me in my absence. Thank you very much. Long time no see indeed. Jorita, yes. Oh, great, Jorita. Thank you very much for this positive feedback. So with this handful of comments here, I will take this as a positive feedback that we are good to go this morning. So once again, I welcome you all to yet another promising edition of the Extreme Speed Live. And my own name here is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as I take you on the trading journey where we shall be dissecting the current market structure using simple parameters such as trend lines, key levels, and of course chart patterns to gain valuable insight into the historical price movement of the assets on my watch list. Well, in fact, I have a handful of assets I would like to share with us this morning. In fact, very simple setups that we can easily take advantage of during the New York session today. And of course, if you do have any assets you want us to look at, since this is going to be our first session for this week, feel free to drop them in the comment section, and trust me, I will try my possible best to include it into our plans for this week. And of course, we shall be doing a follow-up detail on this asset throughout the course of the week. So I am checking the comment section. If you have any, let me know right in the comment section. So as we get prepared for the New York session, you know how we do it. The first thing we are going to be doing right now is to check on the economic calendar. And of course, for those who have been with me for a while, you know how important it is for us to check on the economic calendar, as these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information that will make us position ourselves in such a way that we can capitalize on any potential opportunity during the New York session, prior to the events, during, and even after the events. So on the economic calendar for this week, I will be focusing on high impact events from both the United States and the Japanese economy, as these are the assets that I have included on our watch list for this week. So let me just do some little adjustments into this economic calendar so that we can have a better perspective into what is going on here. So for today, Tuesday, September 26th, we really do not have any high impact event. And for us to have a better perspective into the market sentiment, we really need to look out for something that majority in the market will be looking forward to. And as a result of this, we shall be taking it a step further by including the medium impact event. And let's see what we have here. Now, for the medium impact event, in fact, I was able to pull out about five medium impact event that we shall be looking forward to, both from the United States and, of course, the Japanese economy. Now, the first event we are going to be looking forward to today is coming up in about 2 to 3 hours from now, and that is the housing price index. Now, for those who don't know what the housing price index is, this is an index released by the Federal Housing Finance Agency, and it provides an estimated value of housing market conditions. And as you all know, it is an important indicator as the housing market is considered as a sensitive factor to the US economy. And generally speaking, a high reading is considered as positive for the US economy and, of course, for the US dollar, and a low reading is considered as negative. Now, if we look at what the house index here is saying, we can say the previous data came in, that is for the month of June, came in at 0.3%, and we are looking forward to what the new data for the last month is going to be. And from what the economists are projecting here, we have a figure coming in at 0.5%. So generally speaking, there is an expectation that there is an expansion in that sector, which of course is going to be a positive signal for the US dollar. However, we still need to wait and see what the actual data is going to be. And of course, we know that the anticipation of this event will definitely reflect on the chart as price action. Then we also have the consumer confidence. This is an event coming up about 4 hours from now. We also want to be looking forward to what the actual data is. Now, for those who don't know what the consumer confidence is, this is an index released by the Conference Board, and it captures the level of confidence that individuals and citizens have in the economic activity. A high level of consumer confidence stimulates economic expansion, while a low level drives to economic downturn. And on this one, generally speaking, we should be expecting that a high reading is going to be giving us a positive sentiment in the market, while a low reading should be considered as bearish for the US dollar. Now, for the data here, we really do not have any data to compare with for this in anticipation of this event, but in such case scenarios, we normally see this data coming like a couple of hours into that event. So let's look forward to what that is going to be. Then simultaneously, we have the new home sales change for the month of August, and this is another data coming in from the housing sector, and it is released by the US Census Bureau, and it's an important measure of housing market conditions too as well. And generally, a high reading is seen as bullish for the US dollar, and a low reading is considered as negative. Now, look at the previous data for the month of July. It came in at 4.4%. We still don't have an estimate ahead of today's event, but we shall be looking forward to see how the actual data is going to be. Is it going to be beyond the previous data or below the previous data, or comes in as expected? Then we also have a speech coming up much more later in the day. That's about 9 hours from now, and it is coming from Michelle W. Mickey Bauman, and she's an American attorney and a governor on the Federal Reserve Board. And of course, whatever she says here will give us an insight into the monetary policy of the Federal Reserve, and of course give us an insight into the health situation of the US economy. And of course, we do not want to miss that, so that we can have a clue of how we are going to be positioning ourselves for a long-term view in the market. Then much later in the day, we are going to be looking forward to the Japanese economy, where they will be releasing the monetary policy meeting minute for the Bank of Japan. And for those who don't know, this is the minute shows a hawkish outlook that is seen as positive. That is, if the minute shows an hawkish outlook, it will be considered as positive for the Japanese yen. But from the look of things, especially we've been monitoring the USD JPY for a while now, and you all know that we are at a very critical structure in the market right now. We are going to be looking into the details on that one, on how we are going to be managing our position as regards to this. And for those who were with me during our previous week, you remember how we were able to take advantage of some bullish momentum against the Japanese yen, considering the fact that the ultra loose monetary policy is still going to extend into the later part of the year. So we are going to be looking at that in a detail. Now, with the informations we have gathered here on the economic calendar, it is high time we moved into the chart and look at things from a technical standpoint. Now, as usual, the first asset we are going to be looking at today is going to be the which one is that? The US All Spot. Now, on the US All Spot, I have actually been selling the US All Spot since yesterday's trading session, and in fact, I will be sharing with you in a moment what led into the idea of selling this asset. Now, let's go right into the higher time frame so that we can have an holistic perspective into what is really going on in this market. Now, interestingly, on the 4 hours time frame, this was where I started my analysis for this week, and what I did here was to take into consideration the nature of price action since the month of August. And interesting enough, you see what you have on the chart right now is an ascending channel which further emphasizes the strength of the buyers in this market. And what I did here was to connect the series of higher lows, as you will see here, giving us the support line of that channel. And of course, I also connected a series of higher highs, giving us the resistance line of that channel. And of course, you see it's a very strong bullish momentum, and we actually expected that price will continue to the upside. But unfortunately, as you will see for the buyers, we saw our price finally did break down the support line here to incite a bearish sell-off. And from a technical standpoint, when price breaks down off an ascending channel, breaks down the support line, it's a clear sign that we might likely be seeing a momentum shift. And to further help me guide my trading decisions for this week, I was able to identify a key level which I agreed that which I will be using to guide my trading decisions for the week. And interestingly, we have a level at the $90 area, a strong psychological area considering the round figure of that price. And as you will see, price did break down that $90 level, leading to the breakdown of that support line to incite a sell-off in this market. Now, besides the key level at the $90 area, there is another structure here that is important that we also take into consideration before we scale down into the lower time frame. Now, if you look at the structure closely, you will see that since the second week of this month, price has been confined within a range. Despite testing a new high at the $91.50 level, you will see price has been caught within this range in the last couple of weeks, and that is between the $91.50 level and of course the $88.50 area, which further emphasized the level of indecision in this market during this period of time. Now, with the way things are going right now, you will see that in the last 4, 6, 7, 8 hours now, price action is back into that support line, a line which has been a major determinant of buying pressure in this market. Now, let's go to as far back as a couple of weeks ago. You can see what happened here on the 14th of September. We saw buy pressure resume around that area as soon as price got into that level. We saw what happened here again on during that week too as well, and then fast forward into last week's trading session, we saw another buy pressure resume around that $88.50 level. Now look at what is going on here in the last 5, 6, 7 hours. Now we can see price is back into that structure And it appears we have a breakdown of that level. Now the question going into today's trading session will this breakdown become a valid breakdown, or will it turn out to be a false breakdown? And of course, if this breakdown becomes valid, then we shall be looking out for more selling opportunities below the $88.50 level. However, if price climbs up and we begin to see buy pressure above the structure where sellers find it difficult to bring price down, then we will have no other choice than to join the uptrend. Now you can see how the $88.50 level here is going to play a major role in determining what our next line of action will be during the New York session today. Now, for us to have a better perspective into what is really going on there, that is, we want to see how market participants has been reacting to the zone in the last 4, 5, 6 hours. Now, we would need to scale down to a much more lower time frame, like the 1 hour time frame, where we will begin to see things more clearly. Now, scaling down into the 1 hour time frame, this was what I was able to spot here at the beginning of this week. Now, I would like to share with you what my perspective is looking like since the beginning of the week and what led to the decision that made me to sell the US oil spot. Now, at the beginning of the week, it was more of an uncertain environment. As you will see, the price was initially confined within the $90.10 level and the $89.60 area to give us a flat channel to work with. And for those who have been with me in this community for a while now, you know how we attend to our flat channels. As long as price action remains within that range, we have no other choice than to remain patient, waiting for a signal to come, either in the form of a breakout of the range to give us an opportunity to buy, or the breakdown of the range to give us an opportunity to sell. Now, one interesting thing about this range is the $89.60 level, as you will see here, which interestingly shares a beautiful confluence with that support line of the ascending channel we identified on the higher time frame. Now, look at what happened here yesterday. We saw our price broke down both the support line at the $89.60 level and of course the ascending channel to incite a bearish momentum. In fact, if you had missed out on that opportunity, the market came back to retest the structure multiple times before the bearish momentum continued. And since that moment, I have been selling, adding more positions at every breakdown of key structures like the $89.30 level, as you will see here. And of course, right now, recently, we just had a breakdown of the $88.50 area. Remember, this level was where I told you on the higher time frame that we want to see how the market is going to be reacting to the structure to determine how we are going to be positioning ourselves ahead of the New York session today. And in fact, for those who have been part of this profitable journey since the beginning of the week, well, kudos to you guys for being on standby to capitalize on this move. And of course, you know what we do in this community. When price action moves significantly well, you do want to be moving your stop losses right now, secure the current sell positions while we look out for more opportunities. Now, going into the New York session today, what is going to be our plans? Are we going to continue selling the US oil spot? Are there chances that buyers could come in at any point in time to take over this bearish momentum we have here? Now, for us to do this, I have identified a couple of parameters which we are going to be using to guide our trading activities for today. Now, one of the major parameters we are going to be using here is the trend line I spotted here this morning. Now, if we go to as far back as Friday's trading session when price tested the $90.80 area, you will see that since that moment, price had continued to find lower highs in this market. Now, after connecting the series of lower highs, we have this beautiful descending trend line which we shall be using to guide our trading decisions for today. And of course, you know how we use our descending trend line in this community. As long as price action remains below this descending trend line, we shall continue to look out for patterns and structures that support the idea of selling these assets. Now, you do want to be marking out this trend line on your chart. Very, very important, as we will continue to hold on to a bearish momentum as long as price remains below that descending trend line. Now, if we look at what has been going on here in the last 2 weeks, where we said that $88.50 level had been a strong buy in a share, if buy pressure resumes around that area, there are still chances that price could come back into the descending trend line, where continued selling pressure or buyers finding it difficult to break out of that trend line could incite a downtrend continuation. So these are one of the ways we are going to be using to capitalize on this bearish move. So if price climbs up, all we want to be doing is to mark a level around that shares a confluence with that trend line to guide our trading decisions. So if I look at this structure closely, you can see that we have something around the $89 area and of course the $88.90 level. So I would just like to place this around the $88.95 area. So you do want to be marking out this level on your chart, as we shall be using it as a reference point to guide any bearish momentum or any trading opportunities today. And interesting enough, it shares a confluence with that descending trend line. So if price gets into that structures and buyers find it difficult to break out of that area to the upside, then we continue to maintain our bearish bias. Now, if price continues to go to the downside, we should be having more opportunities to capitalize on the sell momentum. And as a result of this, we have the $88 area. So you do want to be marking that level out too, as well, as we are going to be adding more positions at the breakdown retest of that structure. So mark this level out on your chart and look out for more selling opportunities if price action does break down, retest that level. So at this point in time, the perspective or the sentiment in this market is looking much more bearish. However, things could change, you know how we do it in this community. As long as, in as much as we are looking out for selling opportunities, we also want to take into consideration the potentials of the buyers. Now remember, in the past how the $88.50 level had played a major role in pushing price to the upside, as we can see here that majority in the market has at some point in time seen this price as cheap enough to buy the US oil commodity. Now, if it so happens that this breakdown here that happened this morning turns out to be a false one and buyers continue to push price to the upside, then I will be positioning myself just right above the $88.95 level, where the breakout retest of the structure will confirm the potential of an uptrend continuation. And in fact, we have multiple levels that we can use to maximize the potential of the bullish move. We have the $89.30 level, we have the $89.60, we have the $90 area, which happens to be our key level for the week, where a breakout retest of these levels will be welcoming more buy positions in the market. So you can see how the $88.95 and the descending trend line is going to be playing a major role in determining how we are going to be trading the US oil spot for today. So let's keep this in mind. Let's mark out these levels on our chart and let's get ready to take advantage of these opportunities. Now, these are my views here on the US oil spot for today, and if you do have any questions whatsoever, or you need further clarifications as to how to manage this position, or you didn't understand any aspect of what I talked about so far, feel free to drop your inquiries in the comment section, as I am willing and here to be of help in that regard. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move right into the next financial asset. And you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right. So I see your comments. What's the name here? Ibral 8082096164. I see your comment. 87457009. I see your comment too. 9355. Good morning to you. Thank you very much for checking in. I also see your comment here, 0825 and 63347. So well done, guys. Thank you very much for checking in. So, in the absence of no questions, I want to assume that we are all on the same page. So, I will be moving right into the next financial assets on our watch list. So the next asset we are going to be looking at today is going to be the USTech 100, which is popularly known as the NASDAQ. Now, on the NASDAQ, since the beginning of the week, we have a choppy scenario going on right now, which further emphasizes the level of indecision in this market. And in fact, I have a very simple setup that we are going to be using to guide our trading decisions for today. And before we go into the details on the lower time frame here, I would like us to have an holistic perspective into what is really going on in this market so we can have a better understanding of how to position ourselves ahead of today's trading session. Now, the first thing we are going to be doing here is to scale up into the higher time frame. And for those who have been with me on the USTech 100, you will be familiar with the structure we have on the daily time frame. Now, let's look at what has been going on in this market since the beginning of the year. And in fact, it is quite obvious that price action has been on a strong bullish momentum. And to emphasize the strength of the buyers in this market, I connected a series of higher lows, giving us a beautiful ascending trend line which ran through all the pivot lows in this market structure. Now, as long as price remains above the ascending trend line, we shall continue to look out for patterns and structures that support the idea of buying that asset. However, if the breakdown of the asset happens, it is likely that we might be seeing a momentum shift, and of course, we want to be on standby to capitalize on it. Now, let's look at what has been going on in this market in the last 1 to 2 months here. Now, if I zoom into this current structure, we have an interesting setup going on right now. As you will see here that since the month of June, price has been consolidating. In fact, within that range between the 15,780 and the 14,650 to further emphasize the level of indecision at this point in time. Now, within that indecisive phase here, you will see that despite price has been within a range, we have noticed some lower highs in this market, which resulted in this descending trend line we have here, which finally led to the breakdown of this ascending trend line for the first time this year. So this is the trend line right here, and in fact we saw the breakdown of this ascending trend line happened during the course of last week's trading session, as you will see around this point. Now, I would like to emphasize here that this is the first time this year that price will break down that descending trend line. And you all know from a technical standpoint, when price breaks down our ascending trend line, it could be a sign that sellers are likely going to be coming in at any point in time to incite a strong sell-off. However, there is something interesting on this market structure here that we also need to take into consideration, and that is the 14,800 and the 14,650 zone, where we have noticed how this area had played a major role in negating all attempt by the sellers to break through the structure. Okay, this is a typographical error here, so I'll just have to readjusted. Okay, so we have that zone around the 14,650. Now look at what happened in the month of June. We saw what happened here. You saw how sellers struggled every time price comes into that area as buyers take over the market. Fast forward into the month of August, we saw the same thing here. Sellers struggled again, buyers took over the market. Now, what happened in the last couple of weeks now is after the breakdown, despite the breakdown of that ascending trend line, you will see the price is back into that zone. And in fact, in the last 4 days now, price has been oscillating within that area. Now, for me, this is a sign that buyers are very strong around that point, and majority in the market here are seeing the 14,800 and the 14,650 price zone as an area to buy the USTech 100. And as a result of this, I will be considering that area as a strong demand zone. Please hold on a second, please. I want to attend to some personal issues. All right, everyone. I'm so sorry for the break in transmission. I needed to attend to this one, but I'm glad I'm back with you guys. And where are we? So we were talking about how important the 14,800 and the 14,650 had played a major role in determining the buying pressure in this market. So as long as price remains around this area, we should see this as a buyer's territory. And unless price action slices through the structure, breaking it to the downside, can we now consider that buyers have lost the struggle here and given way for more opportunities to sell? But as long as price action remains within this demand zone, it is quite reasonable that we look out for buying opportunities. Now, with this area here is going to be our crucial zone for this week. That is the 14,650 and the 14,750 area. So now, for us to have a better understanding into what is really going on here, we will need to scale down to a much more lower time frame to see how participant in this market has been reacting to this current structure. Now, to do that, we would like to scale down into a much more lower time frame, which is the 1 hour time frame. Now, let's look at what has been going on around this area since the beginning of this week. Now, look at what has been going on here. It is quite clear that price action has been consolidating, fall within a range. As you will see, price has been confined within the 14,790 and the 14,650 to further emphasize the level of indecision at this point in time. And of course, you know how we do it in this community. When price action falls into this kind of range, we want to exercise patience, waiting for a signal to come, either in the form of the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line here to give us an opportunity to sell. Now, there is something interesting about this consolidation phase I was able to spot here, and that is the fact that that support line here at the 14,650 area had played a major role in negating all attempt by the sellers to break through that area. For me, at this point in time, I will be considering this 14,650 area as a temporary demand zone where it is likely that buyers could take over this market one more time. And the inability of sellers to break through this area since the beginning of the week, for me, is a clear sign that we might be seeing a bullish momentum for this week. Now, how do we intend to capitalize on this bullish move? Now, look at what has been going on here since the beginning of the week. We saw what happened here. We saw buy pressure here yesterday. We saw what happened here during the New York session. And in fact, in the last couple of hours right now, we saw a sharp rejection, which futures a hammer candle, which from a technical standpoint is a sign that buyers are very strongly present around this point. Now, how do we intend to capitalize on trading opportunities here? Now, normally we want to wait for price to break out of the resistance line at the 14,765, 14,790 area to capitalize on the bullish move. However, if we look at the distance between where price is right now and that resistance zone, it is roughly 90 pips. And we don't have to wait the whole 90 pips before we can finally take advantage of this bullish opportunity. So what I want us to be doing here is to see how we can actually join this bullish momentum even before the breakout of the resistance zone around the 14,765 and the 14,790 happens. Now, how do we capitalize on that? Well, I have identified a key zone or key level, let me say, around the 14,710 area. As you will see, this level here had played a major role in determining price movement since the beginning of this week. As you will see, we saw a breakdown here, we saw a breakout and consolidation phase here, we saw the breakdown here, and in fact in the last 6, 7, 8 hours now, price has been trading below this structure. Now, for me to join a bullish momentum at this juncture, I would rather want to see price break out, retest the structure, then I can join. If I continue to see buy pressure here, then have the buy stop order above that 14,765 and 14,790 zone to maximize the potential of this bullish move. So to make things a little bit much more clearer, let me label this one right here. So we have it at 14,710. So you do want to be marking this level out on your chart, as we will be needing it as a reference point to guide our buying opportunities in this market. So above the 14,710 is an area we are looking out for buying opportunities today. And if price continues to the upside, we want to be adding more buy positions at the breakout of the 14,765, 14,790 zone. So this is how we are going to be capitalizing on a bullish momentum today. However, in as much as we're looking out for buying opportunities, you know how we do it in this community, we cannot ignore the potentials of sellers. Now, if we are going to be considering selling the US Tech 100, then a breakdown retest of the 14,650 will be all we need to capitalize on a bearish move. At the breakdown of the 14,650, price would have taken out all the buy positions around this area, where a retest of structure will reveal the sense of liquidity around this area to capitalize on selling opportunities here. So we are not going to be selling the US Tech 100 unless a breakdown retest of this temporary demand zone at the 14,650 level happens. So let's mark these levels out on our chart. This is my setup for today's trading session on the US Tech 100. And if you do have any questions whatsoever as regards to this, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move into the next financial assets. And you can as well use that time to mark out these levels as I wait for your inquiries before we move on. All right. So in the absence of no questions, I want to assume that we are all on the same page. So we shall be moving right into the next financial asset. So the next asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. So I have already been selling the XAUUSD since the beginning of the week, and in fact I have a very interesting position running at this point in time. I think I have about 3 positions running on the XAUUSD as I hope to continue to milk this bearish momentum to the downside. Now, before we go into the details here, I would like to share with you what things are looking like from an holistic perspective so that we can all be on the same page and get ready to maximize the potential of any trading opportunities today. Now, the first thing we are going to be doing here is to scale up into the higher time frame. And there is something here I would love to share with you. Now, if you look at the structure, for those who have been with us since in the last couple of weeks now, you will see that the same setup we had at the beginning of last week still remains the same, only that I had a little bit of tweaks to the current structure. Now, looking at what has been going on here since the last quarter of last year, it is quite clear that price action has been strongly bullish in this market. However, that is not where our center of focus is going to be. Now, if we look at what has been going on in this market since the month of March of this year, you will see that price action appeared to have gradually transitioned into an uptrend continuation pattern in the form of a falling wedge. Now, let me line this up out for you so you can see what I mean here. So you can see how we have a falling wedge at this point in time, where the breakout retest of that resistant line of that wedge will be all we need to capitalize on a bullish momentum. And to further buttress the possibility, the potentials of buyers pushing price to break out of that structure, is this 1,900 area, which has been a prominent zone for buying power since the month of March this year. As you will see, as soon as price gets into this area, sellers found it difficult to break through. Buyers came in to take over the market. We saw the same thing happen here at the beginning of the month of July. We saw what happened here in the month of August. And in fact, in the last couple of weeks, sellers have been struggling as we saw buy pressure resume around that area. Now, in as much as price remains above this area, it is reasonable that we want to be looking out for buying opportunities with the hopes that this falling wedge will be broken to the upside to further maximize the potential of that bullish move. However, in as much as we're looking out for this buying opportunity, we cannot ignore the potentials that sellers could still come into. Now, to help guide our trading activity for this week, the 1,925 zone remains our key level for this week. Remember, this is our key level for last week, and it still remains the same as price still continues to trade around that area. Now, if you know how we use our key level in this community, as long as price remains below the key level, we look out for patterns and structure that supports the idea of selling, while if price breaks out of our key level, we look out for structures that supports buying opportunities. Now, in as much as we're looking out for selling opportunities right now, since price remains below that structure, we need to be very, very careful as buyers could still come in at any point in time. Now let's scale down into the 4 hours time frame. There is a simple setup I have here on the 4 hours time frame which we shall be using to guide our trading decisions for this week. Now look at the structure we have on the 4 hours time frame. What I did here was to take into consideration the nature of price action since the month of July. And in fact, since the month of July, price had consistently found lower highs, giving us a sense of bearish expectations in this market. However, something interesting happened in the month of August. As you will see, despite the lower highs we have in this market, price is yet to find a lower low to emphasize the strength of the sellers at this point in time. Now, the lowest point price has gotten to in the last 1 month is the 1,885. And every attempt by the sellers to find a new low has been negated by the buyers at the 1,900 area. As you will see here, they've been coming into that structure. Buyers have been negating all attempt by the sellers, hereby giving us a higher low. And whenever we notice higher lows on the chart, it's a clear sign that buyers are gradually gaining momentum behind the scenes. Now let's zoom right into what has been going on here in the last couple of weeks. Now, the last time price tested the 1,900 area was a couple of weeks ago, as you will see here. And in fact, we had an impulsive move into the 1,947 area. Now, following the Fed's interest rate decision last week, we saw this crash happen, which I was of the opinion initially that this could likely be a retracement of that impulsive move to incite an uptrend scenario. Now, what I did here was to bring out our Fibonacci retracement tool, run it through the previous impulse leg to project where it is likely that the retracement phase will end. And of course, my center of focus is between the 50 and the 78.6% of the previous impulse leg. Now, as long as price remains within the window here, that is between the 1,925 and the 1,910, and I see buy pressure resumes around this area, it might likely lead to an uptrend continuation of that impulsive move we saw earlier. That is, I think a couple of weeks ago we saw this impulsive move. Now, you can see how crucial this moment is in the market, so we need to be very, very careful. So we're still within that window here. So what I did now was to scale down into the 1 hour time frame where I wanted to see how the market will be reacting to this window that we have here. Now, scaling down into the 1 hour time frame, things becomes a little bit much more clearer, as you will see right here. So let me zoom into the current structure. So I would like to share with you what I saw at the beginning of the week that incited selling opportunity, despite the fact that we're still within that sell window we identified on the 4 hours time frame. Now, the first thing that happened at the beginning of the week was an indecisive market as we saw price confined within the $1,926.50 level and the $1,922.75 area to further emphasize the level of indecision at that point in time. And of course, you know how we use our flag channel in this community. As long as price remains within the range, we exercise patience, waiting for either a breakout of the resistance line or the breakdown of the support line for trading opportunities. And prior to the final breakdown, we saw attempts that sellers were gaining momentum as we saw breakdown of the structure multiple times before the final breakdown happened here yesterday to incite this strong bearish move to the downside. And since the breakdown of the $1,922.50 level, I have been selling. And for those who took advantage of these opportunities, well done to you, as we currently have about 115 pips running in profit at this point in time. And as a result of this momentum, I had multiple levels like the 1,915 and the 1,913 area where we looked forward to more selling opportunities, as you will see right here. Now, for those who took advantage of this seller opportunity, well done to you for being on standby to capitalize on that move. So you do definitely want to be moving your stop losses right now to secure the current position. And I'm of the opinion that anywhere between the 1,915 and the 1,913 area seems most appropriate to secure this current sell position, while we also give enough room for price action to breathe. Now, with the way things are going on right now and with a well-secured position, it is likely that sellers will continue to push price further to the downside. And if you had missed out on the sell positions we've been enjoying since the beginning of the week, there are still more opportunities to play here, as we have the 1,910 area where the breakdown retest of this one right here will also be welcoming more selling opportunities. So you do want to be positioning yourself below that structure. Breakdown retest of that area will also be welcoming more selling opportunities. And in fact, we have a descending trend line which we are going to be using to guide our trading decisions, as you will see here. Since the later part of the New York session, price has been finding lower highs here, so you do want to be marking out this trend line, and as long as price remains below this trend line, we shall feel comfortable in the sell position. Now, in as much as we're looking out for selling opportunities, remember that we normally take into consideration the potentials of buyers in this market. Now, what is it that I'm going to see here that will want me to consider buying the XAUUSD? Now, what I want to be looking out for here is price breaking out of this descending trend line. Now, if this trend line is broken, then we are likely going to be seeing a reversal setup that is likely going to be sending price going to the upside. Now, for me to buy the XAUUSD today, which I doubt will happen, but if it does happen, we want to be looking at the breakout of the 1,913, the descending trend line, retest of structure, where we see signs that sellers are finding it difficult to drop back below the descending trend line, then we can join that bullish move, then add more position at the breakout retest of the 1,915 level. So this is how we are going to be maximizing a bullish opportunity here in this market. So let's mark this level out, and if price continues to climb, we have the $1,922.75 area, which was broken yesterday. And if price gets into the zone, we want to be very, very careful. Hence, we move all stop losses and secure the buy positions while we wait and see how the market will react to the zone. And of course, if selling pressure resumes around that area and buyers find it difficult to settle above that zone, we will be looking forward to a trend continuation to the downside. However, if price breaks out of the $1,922.75, then we will be looking out for buying opportunities at the signs that sellers are finding it difficult to drop back below the $1,922.75. So this is how we are going to be managing our position on the XAUUSD for today's trading session. So let's mark these levels out on our chart and let's see how the market will be reacting to the zones to determine what our next line of action will be. So these are my views here on the XAUUSD. It's a simple setup. So we currently have a bearish bias going on right now, and we have a descending trend line that we are going to be using to guide our trading decisions today. And as long as price remains below that descending trend line, we shall feel comfortable in the sell positions, and a breakout or a breach of this descending trend line will be welcoming buying opportunities in this market. So these are my views on the XAUUSD. Mark out these levels on the chart and let's wait and see what will be happening during the New York session today. If you have any questions whatsoever as regards to the current setup or my explanation, or you need me to clarify something, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds. We're already out of time before I round off on this one. All right. All right. So in the absence of no questions, I want to assume that we are all on the same page here, and in fact it has been a wonderful moment with you guys after a couple of days now since we did our last session, and I'm very glad to be with you guys once again, and I look forward to seeing you same time tomorrow. And for those who are joining us for the first time, I do hope you found this session helpful and useful in making your independent trading decisions. And in fact, I would like to encourage you to stay tuned in and be part of our subsequent editions, as the more time you spend with us, the better you get in understanding how this works, and eventually be able to use the information you gather here to make your own independent trading decisions. So on this note, I wish us all the best of luck, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come back here again to review how well these assets have been doing, and at the same time get ready for tomorrow's New York trading session. So on this note, I wish you all the best of luck. Do have a wonderful day out there, and see you very soon. I see your comment, Jorita. Glad to have you around, and let's see how we can do XAUUSD tomorrow. I made mention of this earlier when we started, that if you have any assets you want us to look at, feel free to drop them in the comment section, but you didn't. Feel free to let me know tomorrow. Remind me tomorrow morning, and we shall do something on the XAUUSD. All right, Jorita. Do have a wonderful day, everyone, and peace out to you all. Bye bye.